Hello and welcome to the February edition of Bridge to India's monthly renewable market update. We start with the tender and auction updates. Utility scale tender issuances were down 70% in February at 679 megawatt from around 2 gigawatt in January. However, project allocations were up 43% at 1200 megawatt. Overall tender activity has stayed weak for more than a year as SECI has been trying to tie backlog of auction projects with discoms. Rooftop tender issuance jumped by 674% owing mainly to a 1 gigawatt residential tender from Gujarat. Looking at the auction tariff trend, winning bids in SECI tenders have stayed in 2.20 to 2.40 range despite steady increase in module and other input costs. Developers continue to take aggressive bets in face of slowing auctions, betting on a sharp drop in module prices. Let us now dive into specifics of individual tenders and auctions. There were 7 new utility scale tenders and 6 new rooftop tenders in the month, totaling 629 megawatt and 1076 megawatt respectively. Results were announced for one project development tender and 2 EPC tenders. Bid submission deadlines were extended for 4 tenders. Let us look at tenders issued in the month. 2 project development tenders were issued under Component A of Kusum scheme, 445 megawatt by MSEDCL in Maharashtra and 5 megawatt by Jakeda in Jammu and Kashmir. Ceiling tariffs are Rs 3.10 per kilowatt hour for both tenders. While individual project size is between 0.5 to 2 megawatt, Jammu and Kashmir tender allows projects of less than 0.5 megawatt in specific cases. Bid submission deadlines were March 17th and 28th respectively. 5 EPC tenders totaling 179 megawatt were issued in the month. EESL issued a 70 megawatt EPC tender including O&M for 12 years across various locations in Goa. Projects are split into 3 lots with capacities of 25, 25 and 20 megawatt. Instead of providing bid bond or EMD, bidders must sign a bid security declaration that will suspend them for a period of 1 year if they withdraw or modify their bids or fail to submit a performance bank guarantee after empanelment. SECI issued a tender to develop 100 megawatt capacity at Getalsur Dam in Ranchi, Jharkhand with O&M for 10 years. Minimum CUF is 21.6% and power will be procured by Jharkhand discoms. The bid security for the tender is INR 70 million. Now, let us look at the new rooftop solar tenders from the month. Madhya Gujarat Witch Company Limited has issued 2 empanelment tenders for installing residential rooftop systems in Gujarat, 700 megawatt in urban areas and 300 megawatt in rural areas under MNRE's subsidy scheme. It is encouraging to see Gujarat take a lead in residential market. The state is estimated to have accounted for more than 50% share of total residential installations in 2021. Telangana, Odisha and Jharkhand also issued 50, 20 and 5 megawatt tenders respectively under the same scheme. Tripura Renewable Energy Development Agency issued an EPC tender including O&M services for 25 years to develop 1 megawatt rooftop solar capacity on government buildings. Coming to results, there were 3 tenders where results were announced in February. SECI completed auction for its 1200 megawatt project development tender for projects in Koppal and Gadag districts in Karnataka. Karnataka Solar Park Development Corporation will provide 4 acres per megawatt land to developers on sub-lease basis. The 2-phase auction with 100 megawatt for each district saw participation from 8 developers. Haryana and Fortum were winners in both districts and were awarded 600 megawatt each at tariffs ranging from INR 2.35 to 2.37 per kilowatt hour. The SECI Himachal Pradesh floating solar 15 megawatt tender was awarded to SJVN at a tariff of INR 3.41 per kilowatt hour. The project will be set up at Nangal Pond in Bilaspur, Himachal Pradesh, and power will be supplied to Bhakra Beas Management Board. GSECL awarded an EPC contract to Larsen & Toubro at INR 3.35 billion to develop a 35 megawatt solar project with 57 megawatt-hour battery storage capacity in Kutch district of Gujarat. This is one of the largest storage projects under development in the country. Let's discuss major policy and regulatory updates from the central government. Ministry of Finance notifies basic customs duty on solar cells and modules. The Ministry of Finance has issued a formal notification for levy of basic customs duty of 25% on solar cells and 40% on solar modules imported after 1st April 2022. Projects where bids were submitted after 9th March 2021 will not be eligible for change in law compensation arising from associated increase in project cost. The notification finally provides clarity to the industry as there was uncertainty in the last few months with many developers lobbying the government for duty postponement. Since domestic module manufacturing capacity is insufficient to meet current demand, we expect developers to continue to rely on imports for next 2 years at the very least. But many developers may choose to import cells rather than modules to reduce duty burden. Government enhances budget allocation for solar PLI scheme to Rs 240 billion. The Ministry of Finance has increased budget for solar manufacturing PLI scheme to Rs 240 billion. Surprisingly, MNRE has decided to issue fresh tender for selection of manufacturers for allocation of enhanced budget, even though a wait list of companies was notified following the first auction. Under the first PLI tender issued by IREDA in May 2021, 15 companies with total bid capacity of 48.6 gigawatt were shortlisted. A new RFS document with higher ceiling size of up to 10 gigawatt per bidder as against 4 gigawatt previously is expected to be issued by IREDA. We believe that the revised scheme will favor larger developers with integrated capacity. Ministry of Power clarifies rules for determination of change in law compensation. The Ministry of Power has clarified that a predefined formula for determination of change in law compensation shall be applicable only if the relevant event occurred after 22nd October 2021. A predefined formula was approved by the Ministry in Electricity Rules 2021 issued in October last year. As per the rules, a new tariff inclusive of change in law compensation shall be applicable within 30 days of the event, with regulators required to verify the new tariff within 60 days. CERC has already started referring to the formula for disposing of change in law petitions. The regulator would now likely have to hear these petitions again on a case-to-case basis. MNRE extends SCOD for projects affected by transmission delays in Rajasthan and Gujarat. SECI, NTPC and NHPC have extended scheduled COD for projects affected by transmission delays due to the Supreme Court order to preserve habitat of Great Indian Bustard in Rajasthan and Gujarat. SCOD has been extended until 30 days after the final Supreme Court decision on an application filed by MNRE in November 2021. The extension shall be available only if land has been procured and project commissioning has been delayed due to non-completion of transmission infrastructure. The Supreme Court in April 2021 had directed installation of bird diverters or conversion of existing overhead transmission lines to underground lines. The court had also directed that all new low tension lines be laid underground and decision on high tension lines be taken on case-to-case basis. The deadline extension is a huge relief for developers, particularly as equipment costs are still quite high. MNRE issues draft green hydrogen policy. The policy focuses mainly on reducing cost of power for hydrogen production. MNRE has proposed that DISCOMs sell renewable power to hydrogen producers at price equivalent to actual cost plus a small margin determined by regulators. For open access procurement, the policy has provision for 15-day single window connectivity approval, 1-month banking and ISTS charge waiver for 25 years for projects commissioned by June 2025. We believe that the policy fails to address key areas for development of green hydrogen ecosystem. Immediate priority should be to nurture domestic technology and infrastructure development capabilities through R&D investments, subsidies and tax breaks. Moreover, we do not expect the DISCOMs and state regulators to be supportive of many of the proposed changes. Ministry of Power removes L1 matching requirement for round-the-clock blended renewable power tenders. The Ministry of Power has issued an amendment to competitive bidding guidelines for procurement of blended renewable power and removed requirement for the bidders to match L1 bid. This is the third amendment in RTC power procurement guidelines in less than 2 years. The first tender under these guidelines was issued in March 2020 with results announced in October 2021. Hindustan Thermal was the lowest bidder with a tariff bid of 3.01. Other bidders included Greenco, Renew Power, JSW Energy with bids of up to 3.49 rupees per kilowatt hour, but none of them have agreed to match L1 tariff. CERC proposes to remove price bands for RECs and allow bilateral trading. CERC has issued draft regulation for renewable energy certificates with proposals to do away with floor and forbearance prices. Other key proposals include perpetual validity and introduction of bilateral trading. REC multipliers of 1.5 to 2.5 have also been proposed for hydro, waste to power and bioenergy projects. Other proposed reforms include increasing validity of registration of existing projects from 5 years to 15 years and to 25 years for new projects. The proposed changes have been long awaited. While the measures are positive, a key supply side hurdle remains unresolved. Since green attributes of most projects are passed directly to off-takers, the market faces a critical shortage on the supply side. It is not clear how this issue would be addressed. Let us now discuss some key policy and regulatory updates from the states. Haryana proposes to link banking facility with project ownership. Haryana regulator has issued a draft amendment to Renewable Energy Regulation 2021, proposing that banking be restricted to projects where at least 51% equity stake is owned by consumers. This is yet another attempt by Haryana to restrict growth of open access solar in the state. The principal regulation has proposed a high banking charge of Rs 1.50 per kilowatt hour, which severely hurt attractiveness of open access solar power. Regulatory hurdles and resistance from DISCOMs towards open access solar power makes Haryana a laggard in the CNI renewable market. Madhya Pradesh issues draft regulation for rooftop solar power systems. Madhya Pradesh regulator has proposed 500 kilowatt as size limit for rooftop systems under net metering and 1 megawatt under gross metering arrangement. Further proposed changes include restriction of grid connectivity to systems under capex model, provided that consumers have not availed open access. Low system size limit and restricted eligibility will significantly hamper the state's rooftop solar power market. As of June 2021, Madhya Pradesh accounted for less than 6% of CNI rooftop solar power capacity in the country. Delhi extends open access charges exemption for rooftop solar power systems until financial year 2024. Delhi regulator has extended exemption from wheeling and banking charges and cross-subsidy surcharge to all rooftop solar power systems commissioned before 31st March 2024. The waiver, first introduced in May 2019, was set to expire on 31st March 2022. It will be available to systems with a cumulative capacity of 165 MW. Delhi is among the most attractive rooftop solar power markets in the country due to high per capita income and power consumption. We estimate its residential rooftop market potential to be over 2 GW by 2030. Recently, the state government announced a target to add 2.5 GW rooftop solar power capacity over the next 5 years. This concludes key updates from Indian renewable power market from February 2022. We hope you found this update useful. You can view all tender, policy and regulatory information on the renewable power market in real time at India RE Navigator, a one-stop market intelligence portal for the renewable sector. You can also write to us at contact@bridge2india.com if you have a query or feedback. We would love to hear back from you. We'll be back next month with another update. Until then, goodbye and take care.